And if you look at Bitcoin's compound annual rate of return, it's 44% over that time versus I think it's 4.5% for all other assets combined. So we think that superior returns are going to be there. This is the beginning. This is just the beginning of this new asset class. Yes, and the volatility is coming down. As we look at, are we going to have the same returns from peak to trough going forward? Perhaps not. But we've come a long way, and we still think we have miles to go.
Don't forget to subscribe, traders. Let's continue with the interview to analyze it later and also comment on some of the most important news of the day.
Many people think of Bitcoin as a risk-on asset, and it certainly has traded like that over time. But we have been looking at it as both risk-on and risk-off. And I can tell you when we first learned that in 2015, when we took our first position in Bitcoin via GBTC, Bitcoin was about $250. And many people were making fun of us at the time, thinking, oh, they're new. We had just started our funds in October of 14. Oh, they're new. They're just trying to gain attention. This is a marketing gimmick. And so we were really on the spot. First of all, we had done a lot of research. We didn't think, we thought there was real investment merit, but we're watching like a hawk its moves. And back then, Greece was threatening to leave the European Union. And every time there was a flare-up, and a fear of another European sovereign debt crisis, Bitcoin inched up. And so we've been looking at it as both a risk-on and a risk-off asset for quite some time. And the regional bank crisis last year kind of confirmed that point of view, that here Bitcoin more than doubled as regional banks were imploding. So I think many people are beginning to say, well, as they learn what this is, wow, could it be both a risk-on and a risk-off asset? We think so.
In analyzing the performance of the Bitcoin market, it's crucial to recognize its dual nature as both a risk-on and risk-off asset. This means that its behavior is influenced not only by traditional economic indicators, but also by market sentiment and risk appetite. Historically, Bitcoin has demonstrated this duality, often serving as a safe haven asset during times of economic turmoil while also exhibiting characteristics of a high-risk investment during periods of market exuberance. During economic crises, Bitcoin's behavior becomes particularly noteworthy. It has, at times, shown resilience and even flourished amidst global economic uncertainty, attracting investors seeking alternative stores of value outside of traditional financial systems. In these instances, Bitcoin's decentralized nature and limited supply appeal to those wary of centralized monetary policies and fiat currency depreciation. Conversely, there have been periods of initial skepticism towards Bitcoin investment, such as in 2015. During this time, market perception of Bitcoin was still evolving, and economic uncertainties prevailed. Many investors remained cautious, unsure of Bitcoin's long-term viability and its ability to withstand regulatory scrutiny and technological challenges. However, despite the initial skepticism, Bitcoin continued to gain traction and legitimacy over time. As more institutions and mainstream investors entered the market, confidence in Bitcoin as a legitimate asset class grew. This evolution in perception, coupled with advancements in blockchain technology and increasing adoption, has contributed to Bitcoin's status as a prominent player in the global financial landscape.
As far as the halving, I think what we're trying to do in terms of education, as we have this new investor base, is say, you know what? For the first time, the supply growth of Bitcoin, as it drops from 1.9% per year to roughly 0.9% per year come April, it's hitting an important milestone. The supply of gold has been growing very long term, on average 1%. So now, I mean, it's just marginally, but it is below the supply growth of gold. So we're trying to use that to help people understand a lot of the reason that gold became such a successful asset class is because the supply growth was fairly controlled, especially relative to money growth out there in various regimes, including our own. And so I think I don't see any reason why the halving won't cause the same dynamic that it has in the previous cycles, especially as we're going out there with that message. And it doesn't happen right away, April and boom, and it usually doesn't happen that way. So maybe they'll develop some impatience, but we think that it emphasizes one of the core features of Bitcoin, and the reason it is a risk-off asset as well as a risk-on asset.
Bitcoin halving, a pivotal event in the cryptocurrency world, triggers a ripple effect across markets, sparking a fervent discussion among investors and analysts alike. At its core lies a fundamental shift in the supply dynamics of Bitcoin, a digital asset revered for its scarcity akin to that of gold. The halving event, occurring approximately every 4 years, slashes the rate at which new Bitcoins are produced by half, a move intended to control inflation and maintain the asset's deflationary nature. Delving into the intricacies of this phenomenon, analysts scrutinize the impact of the reduction in supply growth rate post-halving, a transition from around 1.9% per year to a mere 0.9%. This drastic cut heralds a new era in Bitcoin's market dynamics, potentially altering its trajectory in profound ways. Drawing parallels with gold, whose controlled supply growth has been instrumental in cementing its status as a coveted asset class, pundits speculate on analogous outcomes for Bitcoin. By curbing the influx of new coins into circulation, the halving event aims to bolster Bitcoin's scarcity, a fundamental attribute that underpins its value proposition. This scarcity, akin to that of precious metals like gold, is a cornerstone of Bitcoin's narrative as a store of value. Thus, the halving is not merely a technical adjustment but a strategic move to fortify Bitcoin's appeal as a hedge against inflation and economic uncertainty. In the wake of each halving, market sentiments oscillate as stakeholders anticipate the ramifications of reduced supply growth. Historical precedents provide a lens through which analysts glean insights into potential outcomes, with past halvings heralding significant price rallies in the subsequent months. The confluence of supply reduction and heightened demand sets the stage for a potential bull run, propelling Bitcoin to new heights. Yet, amidst the euphoria, cautionary voices remind us of the nuanced nature of market dynamics. While the halving indisputably tightens Bitcoin's supply, its impact on price remains subject to a multitude of factors, including market sentiment, regulatory developments, and macroeconomic trends. Moreover, the efficacy of drawing parallels with gold's trajectory warrants scrutiny, as Bitcoin's unique characteristics and market dynamics may yield divergent outcomes.